Good morning and welcome to another weekly wrap from Edward Street Morgan Stockbroking for the week ending 16th of November. Today, very fortunate to have Andrew Tang join me, who's our equity strategist. Today, I'd like to ask Andrew some overarching questions about the market and see where he sees the market going into the end of this year and potentially where we're headed for next year. So, as you know, the market's come off around about 11-12%. That's the ASX since the end of August, where we saw the conclusion of the last reporting season. And since then, we've seen a lot of these growth stocks really come back, like the Afterpays, the Cochlears, and CSLs. I'm just wondering, Andrew, what do you see for the outlook for these growth stocks? Is it the end of the story, or are we just having a bit of a breather at the moment?
Look, I think you have to look at growth stocks and differentiate which ones we're looking at. I mean, growth stocks, if we take the high PE basket and anything sort of trading above that 28 times, I think not all of them are going to continue to do well. I think the discrepancy in the market at the moment is you've got these growth stocks, which a lot of markets are piling into because growth in the Aussie market is still fairly hard to come by. Market's looking at growing about 67% over the next 3 years, with potentially a little bit of downside risk to that number. So the market has been bidding up a lot of these growth stocks, but to the point where the spread between the growth stocks and the value stocks at the cheaper end of the market is really extended. So we do see some risk, particularly for some of the stocks that have a little bit of earnings risk. They may get discounted quite heavily in the event they miss numbers. So expectations are riding quite high. But having said that, there are certain growth stocks that we think the prospects for global growth are still very, very strong. So you just have to be careful sort of where you're invested in when it comes to growth stocks, particularly pay very close attention to where the earnings profile is, how certain the earnings is. We do like Afterpay, we do like the likes of CSL and Reliance, but obviously it's not a blanket buy opportunity for all growth stocks if we were to categorise them.
Right. Turning to the banks at the moment, we've obviously seen Royal Commission after effects of that. We've seen credit growth constricted somewhat. A lot of these interest only going to principal and interest. If we sort of reflect on the effect that has on the housing market, and especially in Melbourne and Sydney, is that a protracted downturn once again, or is that once again, will we see a bit more growth next year?
Look, I think house price growth has well and truly come off. So in Sydney, it's come off 7%, in Melbourne, around 5%. So look, I do see potential for the housing market to cool off a little bit more off where we are currently. And I think obviously the factors that you're pointing to, rising out of cycle interest rates, and obviously wages still a little bit stagnant where we are now, so growing at that 2.3%, so some way off the 4% which we're used to. So when you don't have that much in terms of wages growth and you've got rising interest costs, then naturally that is going to constrain house prices, and I think a little bit more potentially. But having said that, in the context of what we've seen with the housing market, particularly in Sydney and Melbourne, where you've had double-digit growth for the last 5-6 years, a 7% to 5% fall it's not unreasonable. It's part and parcel of the cycle of housing. So we're not overly concerned that we're entering a bear market for housing where we see a sustained house price crash. And some of the indicators, obviously, that we're looking at, the arrears, delinquency numbers from the banks, asset quality remains quite strong. The amount of housing stress and mortgage stress that we're seeing across suburbs in Sydney and in Melbourne still remain quite low. In fact, it's been improving. And interest rates, whilst they have ticked up, still remain quite low relative to historic standards. So serviceability of the mortgages remains a little bit elevated, but nowhere near where the peaks we've seen in previous cycles. So I'm pretty comfortable where housing's going. I don't see an imminent crash on the horizon. Job growth is still strong. So I think the prospects for housing is a mild pullback, but nowhere near a bear market.
And one of your specialties is obviously high conviction stocks and model portfolios that you do for Morgans. In terms of high conviction stocks, what for a sort of balanced portfolio, what sort of stocks do you see, just briefly, do you see out there which are present good value at the moment?
Yeah, so one that we initiated recently was just the pullback in Reliance. So Reliance is plumbing supply fitter. They've got operations in Europe, in the US as well as Australia. So fairly defensive category, and that's been one of these growth type stocks that have done quite well for some time, but as with all stocks, have been discounted on the back of the recent correction. It's been indiscriminate selling across the board, and I think it's pulled back to pretty reasonable valuation levels. And the outlook for that stock is double-digit growth for the next 3 years. So certainly, with the valuation coming back now, a pretty strong and defensive growth profile. I think that sort of fits the market thematic at the moment, where volatility is still going to be out and about. Central banks around the world are sort of withdrawing liquidity, so I think volatility is going to be a feature of our market for some time. But that's one of the stocks that I think comfortably, if you're holding it with a long-term view, gives you that defensiveness, but at the same time gives you that a little bit of growth as well. So
terrific. Thanks for your time today, Andrew. We really appreciate it. And look, that's another wrap for this week. Please make sure you like the Morgans Edward Street Facebook page, and make sure you subscribe to the channel below. Have a great weekend.